Let's talk a little bit about what the market is doing right now. It's crazy how things have been going up and up since the aftermath of Liberation Day. That's how it's been. It's almost everything that's going up in terms of the big indices. So you're looking at the S&P 500 here, that's up around 15.5% if you're using the SPY, so US denominated here. If you're looking in terms of CAD returns, I know a lot of people will have the S&P 500, the Canadian version. So obviously you get either a boost or on the other side, you get lower returns depending on the strength of the Canadian dollars relative to the US dollars. Something like BSP or ZSP, that's up around 12%. The BMO ZCN, which tracks the S&P TSX, that is up a whopping 23.1%. And I'll dig in a bit more to what's been driving the returns for each. Not surprising because materials, which has a lot of gold miners, have just been crushing it. Bitcoin has been doing quite well. So Bitcoin is up about 33% this year. So very good year so far for Bitcoin. But last but not least, gold is up massively year to date. So I'm just looking at this year. So 50.5%. And the futures just keep going up too. Pretty exciting. I have a pretty big position in gold, but gold rarely goes up this quickly, this much. And I'll be very honest, it scares me that you're sniffing something out. I don't know whether there's something that could happen in treasuries, whatever it is, but this is just massive for gold this year.
Yeah, like when is the last time gold has gone up 50% in a year?
I think you'd probably have to go back, I would think, like in the 70s. Like I'm just going on top of my head. I could be wrong for that, but that would be my first instinct. Yeah.
I mean, I know gold did pretty well pre-financial crisis, I guess, too, from like 2005 to 2008. But I mean, obviously I wasn't old enough back then to ever pay attention, but I would be shocked if it went up 50% in a single year. And in regards to the TSX, Brookfield's doing quite well. Pretty much all the banks, insurance companies, which is rare. The TSX outpaces the S&P 500. Obviously, over the long run, it hasn't almost at any point in time, maybe except post-financial crisis for a few years. But when you get gold ripping and banks doing as well as they are, it's not surprised to see the TSX up by nearly 25%.
Well, even TLT, which is an ETF for 20 plus year in terms of duration for US Treasury, even that is up 5.4%. But we might as well talk about the TSX here and see a little bit more what's been driving in terms of the sectors here. And it's pretty impressive. So this is as of September 30th, 2025. So clearly a few days off, but I think it still gives us a really good overview of what's been driving those returns in terms of sector. And just looking at it, there's one that stands out really above all the rest, and that's materials. So that one is 79% year to date. And because the TSX is very heavy in gold miners, but in miners in general, commodities have done pretty well with the exception of oil, of course, which would fall more in the energy category. This one has just been driving returns. I didn't realize how much it was up, but it makes sense just to see how some of the other miners have done.
Yeah, even like a blue chip like Agnico, and it's up 110% year to date. So if a company like Agnico is up that much, if you look to like probably the intermediate or the junior miners, I would imagine they're up way more than that. I did not think material sector be up 80% year to date. I thought it would be a mix of financials and materials, but yeah, what does it make up? 15% of the index, I think. So obviously you're going to see huge returns when gold miners do well. And it's been a very long time since gold miners have done well. I don't own any miners. I used to own Agnico. I obviously sold way too soon.
Right?
I own Franco, yeah, but I sold Agnico way too soon. Yeah.
I mean, it's always easy in hindsight, right? But aside from that, still some good years for sectors like financials, you were saying earlier, 22.5%. You're looking here at information technology, close to 20%. Some of the other sectors doing well, consumer discretionary. I don't know if there's that many that fall into there, but regardless, so that one is 18%. Energy around 17%. Kind of surprising. Didn't think energy had done that well. Utilities, 17.5%. And then it kind of drops for the rest in the low teens. And then you only have one sector that's down in that first 3 quarters of the year, and that would be healthcare. But I pretty much disregard healthcare, I'll be honest, and no offense to anyone that's invested in Canadian healthcare companies, just it's so tiny. I think there's Bosch and maybe a handful of companies, and it's such a tiny portion. So essentially, the TSX, it's up across the board this year.
Yeah, I just quickly looked up a discretionary index fund, and for some reason it contains Dollarama. I don't know, maybe Dollarama is technically classified. I would have figured it would be a staple, but you're talking like
They do
Magna.
sell a lot of junk, but
Yeah, they do. Yeah. Magna International, like Gildan, Aritzia,
yeah,
BRP.
okay.
And a
Yeah.
lot of those companies have done very well this year, but it's a smaller portion of the market for sure.
If you'd like to listen to the full episode, head to your favorite podcast player and type in the Canadian Investor Podcast. If you'd like to watch the full video, go to jointci.com and you'll be able to subscribe to our Patreon page. On top of that, you will get the podcast feed ad-free. You'll also get our monthly portfolio update and my parents' retirement portfolio update, which I manage myself.